Hello, I'm Richard Hunter, Head of Markets, and welcome to our look ahead for the week commencing the 22nd of February. It's been a generally positive week. Obviously, in terms of the States, it was a 4-day shortened trading week because of the President's holiday. Nonetheless, we still have the possibility of the $1.9 trillion package to come through. Later in the week, there was some slight pressure on technology stocks, the likes of Apple. For example, it's emerged that Warren Buffett, the legendary investor, had sold off some of his Apple holding, although he still retains a fairly large stake. And also there was something of a spat between Facebook and the Australian government, which weighed slightly on US tech shares. In terms of the UK, the fact that the oil price remains very strong, it's up about 22% in the year to date, and the fact that commodities are on something of a tear has pushed the FTSE 100 rather more positively than it had been last week, and that's despite the ongoing strength of sterling. So, scores on the doors in terms of the year-to-date figures: the Dow Jones is up 2.9%, S&P 500 up 4.2%, Nasdaq up 7.6%, and the FTSE 100 up 2.4%. Turning to next week, fairly brisk number of companies reporting. The first one is a trading statement due from Associated British Foods, obviously best known for its brand, which accounts for about half of its sales, which is Primark. Primark, of course, has next to no online offering, so whenever a lockdown comes along, it's hit particularly hard. In fact, it's already said it anticipates losing sales of £1 billion should stores remain closed throughout February, which of course they will, perhaps even into March. So it'll be interesting to see how the trading statement can do anything to allay the fact that the shares are down about 11% in the year to date. Probably the bigger news is that the rest of the UK banking sector will be reporting. Obviously, we've had Barclays and NatWest so far, and a couple of themes are starting to emerge. If we look at Lloyds Bank, for example, this is another thing that we've seen emerging. We've had a spike in share prices since early November when the first vaccine was announced. So shares in Lloyds are up about 39% since early November. But that doesn't change the fact that over the last year, the banking sector shares have indeed been under pressure, and over the last year shares in Lloyds are down around 31%. Obviously, it's often seen as a barometer of the UK economy, so its outlook will be particularly interesting. And rounding off the season in terms of the full year numbers for the banking sector, we're going to have updates from both HSBC and Standard Chartered. Obviously, it'll be interesting to see there not only what happens around dividends and debt provisions, but what they're currently thinking around the situation where they've got large presences in Asia. Thank you for watching. Have a great week.